The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien.
And John Logan. We appreciate you growling and prowling with us out here, folks. Dow Industrials right now up 164. We get the NASDAQ up 47. S&Ps are up 17.5. Gold's down 370, trading at 1168. Bonds, the volatility out here in spades, folks. We get the 10-year down 26 ticks. The 30 years off 2 full points. And good old King Dollar, she's up 719 ticks at 96.38. And folks, our man, Mr. John Logan, kicks us off every trading day, 8 o'clock in the morning. We go from 8 to 6 at night. If you're listening in your phone, in your car right now, don't forget, you can get everything right on your cell phone, tfnn.mobi. And as you come over to our website at TFNN, what you're going to see in the very front page, folks, okay, you're going to see the aspect of a piece of software that is just phenomenal, okay? It's the Tas Profile Scanner Plus. You can test drive this right now, absolutely free, 14 days, no credit card. Hit it. John walks through the market every day looking at this. It's a phenomenal piece of software. There's videos that go along with it. Check it out. We're going to be, we're going to talk about it right now because the markets, no doubt, are highly volatile. John Logan, what's going on?
Hey, man. Good to be back with you. God,
Yeah.
they are volatile. And, I got to use the scanner at this stage to just try to get me through the minefield. I mean, I'm as short-minded as you are right now, actually. And there's some reasons behind that.
Well, we were just talking, folks. John had just finished his show. And, bottom line is that, we were just talking right after that show. And when you look at the scanner, so what I'd like to go through, John, first is this, right? The S&Ps in general, right? Right now we're at 2072. And
right.
What happens, folks, is this. Depending what your time frame is, this is what's important to understand about the profiles in general. Depending what your time frame is, the weeklies on this, I believe, is 2076 or 2074, right, John? Is that's what we're dealing with, meaning the top of the profile, right?
Yeah. Well, we've when we look at balanced areas, whatever, there's really three main inflection points that we look at: the top of the balanced area, the top of the profile, the bottom of the balanced area, the bottom of the profile. We also have a kind of a mode, if you will, of the profile, which we call the POC, the blue line.
Yes.
And those three inflection points are just explicit in this scanner. I mean, you go in here, you go to the futures, you look at the instruments, you mouse over it, it gives you those three numbers first and foremost. I mean, there they are.
I got it up right now. This is so cool, man. Okay, go ahead.
So
Sorry.
So we can go into the futures section, we can find the S&Ps, and we can mouse over, and there's that 2075 area rounded off that you were just speaking of, that
right.
POC there.
Right.
Now, the POC on the daily is 2076. All right. The unfair highs on the 240s are 2079. So, literally minutes ago, we were talking about, where's the resistance level for, the index, the index future kind of having some issues. That DMZ area that we just spoke of, 2075, 2079, that general area, we've kind of gone into that already. We've come back out of it. And I normally don't, really pay a ton of attention to these POCs, but when they line up like this with other inflection points and they're in wide profiles, remember, when you've got a volatile situation and you've got profiles that are kind of taller, if you will, than other previous profiles.
Yes.
You've got to pay attention to all three inflection points. All right. Now, the cool thing is, the scanner also delivers our breadth indicator, which
right.
if we drill down into the S&Ps, I'm just kind of
floating
around here.
Yeah, no, that's good. Yep.
We're still relatively negative breadth, which means the internals of the S&P on the three big time frames I look at, the 240s daily and the weeklies, are still negative. Now there's innuendos to kind of pay attention to here. You've got the 60 minutes, which have turned positive. Now,
yeah, I see that.
We've rallied, and this is kind of the first thing that really pops its head up. And what I'm going to do is I'm going to pull up the 60s, and you can see the red line is instruments trading below profiles on the 60-minute time frame. The green line is instruments trading below. And at one point yesterday, or was it this morning? No, it was yesterday. 95% of the stocks in the S&P 500 were trading below profiles on the 60-minute. Now, that is consistency. So you didn't have any problems when this thing was caving in to really start stepping on the gas pedal on the short side, but we got a really, really cool indication yesterday that we may have met targets. And what was that indication? You and I, in fact, I called Tommy.
Yeah, he came in my office. Yep.
Yeah,
showing me that a new box was forming. Right.
Yeah, I mean, just like the dailies right now.
Yeah.
I've got this up on the screen.
Yeah.
We had an indication that we might have been running out of gas on the south side, because we had, and I've never seen this before, 48% of the stocks in the S&P 500 were attempting to create new demand areas on our 240-minute time frame.
Okay.
And we had already, come down quite a bit. I think we were trading about 2052 when that indication came out.
Yeah.
And all that meant was, you know what? That means that it might be time to start scaling out of some shorts, and we will probably have a new balanced area appear on at least half the stocks in the S&P, which is crazy. And that means that we may ricochet around for a little while. So why take on the risk of staying short the market? Why not wait for a rally to happen into those major long-term inflection points again? And I think that's what you did, which is great.
It was amazing. So picture, when he came in, I says, okay, so I was trading it intraday yesterday, and, I sold both of the highs, and it worked out good, okay? But last night, I know you said, and around midnight, I wanted to sell the S&P. I said, okay, it was up 7. I said, okay, I wait. And I was elated when it was up 15 when I woke up this morning, man. Hey,
Yeah.
so let me ask you this. Right now, I'm looking at the breadth right now. We still have the 240s in a negative, I believe, in the dailies and the weeklies, right? The 60, that's what I have. Is that what do we have?
Yeah.
Okay.
The 60s are positive.
Yeah.
The dailies are, this started happening. Oh, go ahead. What's your question? I'm sorry.
I just wanted to make sure we're looking at the same thing, and we are, because I have the scanner up also. I know we're showing both of them, but I have my scanner up too as I'm trading here. Okay.
Okay, great. Now, one of the cool things we put in here, which is working on the NASDAQ and the S&Ps, we put a price chart down here, so people can, not that I think it's really necessary to look at real time, but people can look back historically now and see how these this breadth relevance towards the S&P chart itself on these different time frames really conducted itself. It's kind of neat how the crossovers. People can kind of go back and say, okay, well, here's a sell-off. Okay, we got breadth negative here, and boom, that's why that was the cohesiveness of the sell-off.
Yes.
And we've got that on 16 different indices globally on it right now. But
which is huge.
right now, I don't see any major crossovers. I see the 240s kind of going between 45 and 35% breadth, net breadth negative, or whatever you want to call it. And I don't see any major turns happening right here. I see still pretty serious reasons to sell resistance when it's offered, and I think you pretty much gave it that range, 75 to 79, right?
No, I like that. I like the confluence. What we're talking about, folks, is this on the S&P. So picture, we can go over this one more time, just so you can understand how this works, because there's plenty of people. If you understand just Fibonacci confluence, folks, what that means is that you have a couple different areas that are coming into the same price points, okay? And that's what John and I are talking about. You have profiles that are into the same point, and that point is basically around 2075. So that area, if you're a bull, you get over 2075, you're going to be elated. If you're a bear, every time you get near 2075, you want to sell it. And just, your stop is on the other side of it, man. I mean, it's that cut and dried using the scanner, folks, okay, which is so cool.
there's a little bit of a range, a little bit higher than 2075. I mean, you might want to give yourself 2078 just to kind of be safe. There's some resistance lining up on 3 different time frames in that general area.
Yeah, I see it at 76.
2075 is the big number,
right.
But you might want to give yourself a little bit of room. And that's, Tommy, what you just said is super important. The breadth information is based on the internals of the index.
I know, which is freaking great, man. It's let me ask you this: on the so when I'm going, let's go back to the 240 again. Does that 240 click off? Is that going to get different? Does it have to have 240 minutes into it? Like right now, we're only a half hour into the market. That's what I'm. No. Cool.
No.
Okay.
No, this thing, we've done some serious database optimizations lately.
Okay.
And we had some issues with it at one time because it is doing so many things. Actually, not on your desktop. We're just giving you the results feed of this.
Oh, which is great. No, I know. I mean, meaning that how fast it is, right? Because it's not working. Yeah. It's working on your service, right? Yeah.
Correct.
Yeah.
Correct. Yeah, we're spending some money to do that. So it's basically giving you the outputs. And it's giving you the outputs every 60 seconds. Right? So if you're looking at the 240s or the dailies or the weeklies for that matter, you go to the 240s, you're getting changes in these numbers that you're seeing right here of, basically taking a slice of the market, peeling it back and looking inside where you never could see that before, just trading the index.
No, well, it's so cool. We just went on the 240. We just went from 39.5 to 40.08. Yeah. You stay right there, man. Tom O'Brien, John Logan, we want to hear from you, folks. Our phone number is 877-927-6648. Come right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is up 158. Nasdaq's up 48. S&Ps are up 18. We're talking about Mr. John Logan. John, we had a question, and if you can just go over this, when the yellow appears, I know what this is, but if we can go over for the listeners, when the yellow shading appears on the bars in the scanner, what exactly does that mean?
Okay, great question. What that means is, and we used to just show a complete, people have had this for a while, we used to just block out a cell completely orange, yellow, or whatever you want to call it.
Yep.
But we went to a kind of a peel back yellow on top of the red or green, which means red below profiles, green above profiles, just to give people a little bit more quicker, scene of whether it was trading above or below profiles originally. So what that means is, and I'm going to do a little bit of a sort here. I'm going to go to my daily grid. There's quite a few stocks doing this right now on the daily. Okay. So I'm going to go daily on the S&P's new box. And I'm going to use that as a filter, and I'm going to only show matching results. All right. So what that's showing me, wow, isn't that unbelievable?
Yeah.
There's a ton of stocks on an intermediate basis that are putting in or trying to put in what we would call new demand areas or new profiles down below stock action. All right. Now, what does that mean? That's an indication in the stock itself that it may be stalling on the downside. Just like yesterday, Tom, when we were talking about that, that 240, half the S&P unbelievably was saying, you know what, I'm putting in new demand areas on the 240-minute time frame. Crazy to have that much concert going on. So what this does is if you're short Apple, right? Yeah. And you're seeing this yellow peel back, which is a filter that we can set, which really is cool because it gives us all stocks that may be, starting to turn around. You may start to look at some bottom fishing in the short run. If this stays yellow at the end of the day, we'll definitely have a new profile appearing. And where's Apple? Okay, there's Apple.
Yeah.
You can go into Apple. You can look at the chart. Here's the landscape situation. Here's the current scene on Apple. Obviously, this is the low inflection point on the daily profile right now, 127.34. But we may have a new demand area happen down here, and then we'll have some new inflection points to pay attention to. But what that means in a general sense is targets may have been reached on the downside. And I'm going to pull up our Tas says over here, and I'm going to go to our intermediate. See there? It says caution to shorts. This is an automated text that tells you how to read this.
Okay.
Targets may have been met in the interim, and trading range could be developing in the downtrend. New demand is attempting to appear if this condition stays in force till Friday's close, blah, blah, and then it gives some pinpoint.
Which is really cool. And folks, what it does is it gives the long-term view, the intermediate view, and the short-term view.
Yeah. Yeah, it's just ultra cool. And right now, we're seeing a pretty decent amount, I must say, of stocks in the S&P on a daily attempting to put in new profiles, and that number's kind of increased.
Yeah, I can see that, right.
The S&Ps are just kind of sitting up here. I'd like to see them get away from areas just like you do. When they go up and try to hit these resistance areas, you want to see them get the heck away from them.
Right.
It's a little concerning that they're kind of consolidating up here, but I'm just going to let this thing I'm going to let the 75 to 78 area be the stop, kind of based on my appetite for risk on the index itself, looking at the profiles on the index. I'm going to let the internals and the information on the internals here kind of guide me through whether I'm supposed to block out the long side or the short side.
That's no doubt. And folks, that's where you're going to look at that breadth analyzer, which is so cool. I mean, because if the breadth analyzer, even on the 60, is getting stronger, well, it's telling you flat out, hey, guess what?
Yep.
The market's getting stronger. If you put that together with the 240, it's going to be really sweet, okay? Because
What's cool, Tom, I'm just trying to get everything out all the time because there's so many things in this scanner to talk about. Just little things that people ought to know. This is in a non-weighted fashion.
Right.
So we wanted to see, in a pure sense, how, are the leaders kind of running the show? Is there a serious disconnect in what's going on in the individual? Yeah. So you can't get that if you weight it. I mean, you weight it,
That's
then
right.
you're kind of you weight it, you're really not going to find those things, and then you're going to have something pretty much mirroring the index action. I mean, if you will.
Exactly. And what happens, folks, is that the individual equities, okay, actually, and this is why it's so important that, John, I always use the cash number as to where the correlation is, where I think the correlation is going to be. And the reason for that is that you need 500 stocks to move the cash number versus the futures. If you're Goldman, Morgan Stanley, bang, you hit 200 contracts, you can do whatever you want with that future. You stay right there, folks. John and I are coming right back.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative Market Safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. John Logan, Tom O'Brien. We appreciate you growling and prowling with us out here. Folks, come over to our website at TFNN, and you're going to see right on the front page, okay? Bottom line is that you're going to be able to test drive the TAS Profile Plus Market Scanner absolutely free, 14 days. Go do it, folks, okay? It's a phenomenal piece of software. We'll walk you through it. Bottom line is that volatility is here in the marketplace, and it's a trader's paradise. Right now, you get the Dow up 109, the Nasdaq's up 34, S&Ps are only up 12, and they just hit this baby once again, and you got to love it. You know, the Greek Prime Minister just come out and just said, go vote no, okay? The bottom line is that the market popped out here this morning in the aspect that things were going to be different. Well, guess what? They're not different. If you take a look at this S&P, what you do have, and this is what's really cool, folks, okay? You know, John, remember when you, I, and Eddie were on the phone, you know, we were talking, folks, is that we had a high volume swing low when I started it at 67. Bottom line, now you have a higher volume swing low. So what that sets up is, guess what? That sets up not only lower price on the 10-minute, what are we at? Well, we're at 5 minutes, man. This market's going to get croaked. It's just crazy, right? You there?
What you said. Yeah. Can you hear me?
Yes, I can. Yes.
Okay. It's really cool what you just said because, you know, your system, you know, a lot of people use on Bloomberg, a lot of people use our way of looking at things.
Yes.
As an enhancement to what they're already doing. All right. It's a confirmation of,
yes,
you know, kind of,
right.
Hey, wow, this is just lining up, and now I feel extra. And what you were talking about, like, this is just kind of an added layer of conviction, if you will. I love it. I mean, listen, that is one of the coolest things that I've heard, because, you know, when you put these two things together and that just kind of drives it home and gives you the confidence to do what you got to do, that brings a smile to my face.
It does. And one of the biggest things out too, John, is that, and I remember even the first time that I had you on when you were first working with, it's that DMZ. It's you know where your squeeze point in. Your squeeze point in the S&Ps right now, folks, are really at the 75. You know what I mean? That's, we hit 77, 75, 70. That's kind of the squeeze point. And guess what? If you're over that, well, just close out the position. Or if you're a bull, guess what? You're over that, you're off to the races in a big way. And that's what I really love about it, because what happens is that it's hitting you on the head with a hammer. I mean, it's like if you're staying after that and you're shot, you're out of your mind. Do you know what I mean? Because you're going to get a bounce that's going to be extraordinary, not in a small way. Do you know what I mean? So. Yeah.
Let me show you something that you'll probably find pretty interesting. I've got our breadth chart on our 240-minute up right now.
Yeah.
And this system on being breadth positive or negative, net breadth positive or net breadth negative, is a system in itself. But when you combine it with the actual profiles of the index itself. Remember, these are the internals of the index and what the internals are doing. But when you combine it with the profiles of the index, it's super powerful. What I'm going to do is I'm just going to take out the middle ground on this chart.
Okay.
All right. And we remember we've got our S&Ps down south here.
Yes.
I'm going to pick out some dates here. This is 6/24, 6/23, 6/24, right?
Yes.
June 6/22. We crossed into negative territory.
Yeah.
All right. On the 240 breadth. Now let's go back to our chart. Here we go. Let's go back to the 23rd and the 24th of June. Guess where that's at?
Wow.
There's the 23rd.
Yeah.
There's the 24th. Then we got below that inflection point on the index. It had a little bit of a noise factor there, but then that was kind of the telltale sign. And then we were just looking to this thing for guidance. It never looked back. It never went breadth positive again. And then we just followed it down. And we can go back to specific dates, which is really cool. We had a big, June 3rd. You remember me talking about the weeklies had that crossover,
which
June
is a big
4th,
deal, right?
Yeah, I mean these are dates where you get the conviction of the internals saying, I'm not playing the game of, the index rallied a little bit. The internals are saying the rubber band's stretching out. I got to snap back. You know what I mean?
Right.
It's almost an arbitrageable event.
Yes.
I mean, and so that's kind of cool.
It's huge, man. It's huge.
Yeah.
And if we take a look, folks, just inside the Dow, now this is just what's leading the Dow out here. You get Travelers is up 261, Procter & Gamble's up $1.12, Microsoft's up 60, and Big Blue's up $2. Taken away from it on the way down is a Cisco. Intel continues to get whacked. Walmart. This is a big one. It's going to be interesting, John. So Walmart, folks, is trading at 70.51. Once you get inside 70.25, this is a mind blower, man. Walmart was it had a 12-year consolidation to get over 70.25. It stayed over there for 2 years, and now it's going to go underneath it again. It's going to blow my mind, man. I mean, it's like, what's going on with Walmart, man?
You've traded against a specialist before. I know you have, right? I mean, you trade in listed stocks.
Yes.
You know all the games.
Right.
All right. So this morning, okay, we get a. How ugly is this? I mean, we get a gap up. Walmart gaps up in concert with the market. Big deal. It's been on our radar screen for a while, on yours too.
Yep.
And look at this action. Boom. We head towards the lows of the recent.
I know,
moves
man.
in this thing. I mean, I mean, the specialist is like trying to get rid of stock.
Right.
There's nobody on the other side.
Right.
That's why he's happy to gap it up so he can get short more of this. You know what I mean? Like
exactly.
This guy's trying to. Yeah, you know what I'm talking about.
Yep.
So
trying to move
that's
much
the action.
Out as fast as you can move out. It's pretty amazing, man. The volatility out here, folks. This is not going to end. The market itself. So we get. Let me just look at something here. You see,
I'll tell you. I mean, there was kind of one place to hide and one place only, the XLV.
Yeah.
And that's still, I'm going to our ETF grid here. XLV is still kind of looking okay on the weekly here, but you picked out a couple ones yesterday right off the scanner, and those are holding up extremely well.
Yeah, and that it is interesting because that healthcare sector. I mean, it's like it's pretty amazing. I guess it's the amount of companies that are taking over each other is absolutely extraordinary. There's no doubt, man. So,
I don't know why you'd hide with longs, but if you were put a gun to my head and said you got to go long something, that has been the go-to thing for God knows.
And I guess people do. Hey, let me. I want to go back to the breath again because as we've been on the air, folks. Okay, you got to watch how this is shaking out. Right now, The 60 is only at 22.26. So
Yeah.
that correlation is getting weaker and weaker as the hour is going on, correct?
Right. Yeah.
Yeah.
And to be honest with you, like if you look at the daily right then, it just flipped to 47% negative. And it's really weird. We're still having a little bit of an increase in new demand areas attempting to appear.
Okay,
on the
I can
daily.
see more yellow showing up. Yeah, I can see that.
Yeah. That's kind of wild, but I mean the 240s kind of run the show as far as momentum moves.
Yeah.
And I'm gonna go back to my index just period here, and the 240s are keeping me relatively happy on the short side here, but I'd love to see this thing, and this is our 60-minute chart. I would love to see this thing really start breaking down below profiles here on the 60-minute and get on back to business.
Yeah.
Here's 75 up top, that magic number you keep talking about. That's the top of our box on our 60s too. So we got a weekly POC, a daily POC, a 240 high, and a 60-minute high, all at 75, 76, 77, 78. That we cross that border, then you might have to kind of take a look at retooling a little bit, and just sitting tight and let the breath kind of tell you when it's time to get back in the water. But remember, everything's got to have stops. I mean, everything.
There's no doubt. There's no doubt.
Yeah.
Well, listen, man,
but
we really appreciate you coming back on. I know it's it's almost 11 o'clock there, right?
That's early.
That's early. I love it. I love it.
No, you got to stay up when the market's like this.
No, you do. Oh, let me tell you something, man. Folks, don't even think of stay in shape. Don't even think of getting, you can get rest, but stay in shape because the next year, when this happens, guess what? We've been in a market that is trending one way for 5.5 years. Okay, we get a good year and a half of a real traders market here, and you can be a bull or a bear, folks. It doesn't matter. Okay, what you have to do is just take your money quick. That's the bottom line. So.
We've got no indications here that we're having a change in tone in the internals, and that means that we may have some more downside moves here.
Yeah, and we're only an hour and 20 minutes into the market, if you're a believer in the aspect that on a fundamental basis, first the Prime Minister said that we're going to cave, and then 10 minutes later we just come out and he's telling all the citizens to vote no. Guess what? The game is still on. The game's only going to be on anyway. What's really cool? I don't know if you heard Larry. Larry has this chart that's phenomenal, and what the chart is, folks, is that it's the chart of the amount of margin that is in the United States. Forget the whole world. The margin in the United States right now is over. And way over. It's almost double what it was in 2000. It's over 50% of what it was in 2007. It's like, you got to be kidding me, man. I was looking at that chart. It was just phenomenal. It was like, and what happens in life, which is just amazing, is that it goes over and over and over again, and you think that it's not going to happen again, and it does, right? I mean, just like after 2007, you think folks would say, okay, I'm not going to margin up. Do you remember how many people said they're not going to margin up? The bottom line is it's even bigger than 2007, man.
Yeah, now it's almost like people are like, God, I'm going to miss it. And that's when they start. Now it's like probably the end. Like the numbers you're talking about, that's phenomenal. I didn't even know that.
Listen, man. When I saw it on Larry, Larry sends out a lot of charts. When I saw that chart, man, I thought I was seeing things, man. Because just like you said, it's like, you got to be kidding me. We're over. And we're over the margin substantially, folks, not a small amount. I mean, I'll pull this chart out and we'll get it on this afternoon. In fact, I got to get Larry on.
Yeah, I tell you, if we get some action too that starts driving this thing down, and we start breaking some barriers again on the downside, especially getting below 2060, 61, that is going to be relatively depressing for most of the people out there that started chasing this thing lately or started doubling up on that dollar cost averaging. I want to shoot the guy who coined that term. Well, that is flat.
So what you're bringing up is huge, and what you have is this: they bought the rally yesterday, and that's why into the close you had pressure. the same thing's going to happen today, folks, if this market can't go, because, you know, I've been in plenty of these prop shops, and what happens even in a momentum prop shop, they bought this thing this morning. You know, but what will happen is that they're going to go home flat. They're not going to be crazy, okay? And if it stays like this, what you're going to see more selling pressure coming into the close, because they say, okay, just take my loss and see you later. But what will happen is that they're going to probably scale down on this deal because they're already hooked in, right? You know what I mean?
Right.
And they're scaled down, and then all of a sudden, you know, whether it's 2:30, 2:45, and they're going to say, okay, I got to get out. And what we're dealing with now, which is pretty cool, is that you're dealing with July 4th. You're dealing with tomorrow is going to be like, it's a full day, but guess what? The trading desk is going to be gone by noon, okay? So...
No, listen, what you said earlier, you mentioned some time frames, and that kind of brought me back about 10 years. I mean, when I started figuring out, you know, there's certain times of the day, you got a window when the market will move, and sometimes it's like, you know, sometimes it happens earlier in the afternoon, sometimes it happens later in the afternoon, but it's almost like you have this static band of time that it's like maybe it's going to start at 1:45 today and end at 2:38 or something like that, and then maybe some days it starts at like 2:45 and ends at like 3:30.
Yep.
When those waves happen, I mean, and right now, you know, we had that early thing happen. It's kind of situating itself right now. We may kind of take a break till this afternoon until the next wave, if you will, or serious stance on when the real money is you know, moving this thing. So you gotta understand. I mean, like in the middle of the day, you guys probably talk about this all the time, Tom. I mean, you get some weird, kind of crazy little moves. When that real move starts happening, start looking at the breadth then, and start looking at who is really participating in this thing, and are there any disconnects? Because that'll tell you. That'll tell you what.
There's no doubt, and you know what's the trip, folks, is that, you know, technically John and I and all the hosts of TFNN can, you know, basically teach you this as the understanding technically what it is. What does happen, and when I was just explaining about the selling aspect of it, that is something that you have to go through. And I've been through it a million times. And I'm sure plenty of us have, meaning that, okay, you're on the wrong side of the market. It's 2:30. It's like, hold it, man. I got to sell before everyone else sells because I know that that's coming in. Do you know what I'm saying?
Exactly.
You know,
yes.
So it's, yeah.
Yes. But what you said about July 4th, people really need to pay attention to that, because it's not like the old days where there's, you know, well, not the old days, but it seemingly has been for the past 6 years. I don't know if these are the old days. You know, people just buy it into the weekend. And like before, it's like, oh, you don't know what's going to happen on the weekend. But now it's been like buy it into the weekend. But we've got a serious situation on our hands right now. Greece has never, I mean, no one's ever exited the euro.
No, totally.
And we got like a big, massive weekend coming up.
No, totally. Well, listen, man, thank you so much, man. You have a great one, safe one. Look forward to the show tomorrow, John.
Hey, I'll be here.
Okay, have a great one, man. Dow right now, folks, is up 101. Nasdaq's up 29. S&Ps are up 11. We're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. We get the Dow up 104, Nasdaq's up 30, S&Ps are up 12. And over in Greece, the negotiations continue on. This is the trip, there's no doubt, because what you did have is that you had the Prime Minister come out and say, okay, first early this morning, and that's what pushed the S&Ps up 15. Well, counter-trend bounce, that was about it. But bottom line is, on a fundamental basis, we have fundamentalists that pushed them up. He does a television interview just as we're on the air right now, and he encouraged voters to reject the austerity measures as part of a bid to end the standoff with creditors. And, you know, bottom line is that he was speaking he reiterated that a no vote, this is his quote, in the July 5th referendum will help the country get a better deal. So this whole thing is not over, number one. The thing that's going to be amazing, there's no doubt, is that, number one, how does it shake out? And I guess, you know, watching some of the pitches coming out of Greece, the folks that were in front of the banks, they looked pretty happy, actually. You know, so I suspect that I believe the pensioners, that's how they have to get their money out of the banks, meaning when they do get paid. So, you know, we'll see how that shakes out. But I suspect that the culture itself, meaning the Greek people, it looks to me like they have taken huge amounts of money out of the bank, and it's not like their money is hanging in the bank. There's certainly people that have money hanging in the bank, but looking at their faces, those faces out there this morning didn't look like they were broke. That's the bottom line. So market-wise out here, you know, what we're going to have is this. Now, check this out. This is going to be pretty cool watching how this shakes out. Because thus far, you know, when you're talking about an ABC structure on the way down, thus far, this is going to be a classic, meaning that you're going into, the S&P is going into 200 million shares. You know, the S&P will do about 120 today, you know, but you've already failed the highs of yesterday. We're at 207.27. That could even hold 207.22. That is saying that you got a B to C of an ABC structure on the way down. NDX 100, same setup. If we go over to the transports, we look at the transports. The transports, no doubt, let me pull this. The transports, yeah. Transports can't move either, you know. So bottom line is that I expect what you're going to see out here is you're going to see more selling. Surprise-wise, you know, bottom line, inside the Dow, inside the S&Ps, the bond market is screaming once again. Watch this. This is a mind blower, this bond market, man. If we pull up the 10-year first, what you're going to see is that the 10-year is rejecting lower price. You're going to have lighter volume. This is also setting up a little ABC structure on the way up. The 10-year wants to go into that 126. It probably wants to get into the 127.37. And I suspect what that is more than anything, that has to do with the amount of money that will be coming out of equity markets running into the bond market for cover. If we take a look at the 30-year out here, what we have with the 30-year, oh, look at that. She almost filled the gap. She's down 1.25. Yeah, and that's setting up really nice, too. Now, John and I, folks, we were talking about the scanner, okay? And just so you can understand how easy this is, as you come over to our website at TFNN, you're going to see it right on the front page. It's the Tas Profile Scanner Plus. You can test drive it 2 weeks, absolutely free. And all you do is this. You put in your email, you put in your name, and within 2 minutes, you're going to get an email back. You download it, and you are up and going with the scanner today. This is a great day to start test driving the scanner. You'll see the breadth, you'll see the videos, you'll see all of the above. You stay right there, folks. Our man, Mr. Basil Chapman's coming up, going to be growling and prowling with you. Look forward to speaking to you this afternoon, folks. Have a great one and have a safe one.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.